Hello and welcome to the channel. If anyone is here, all right, so I think there are some people here. All right, so if you're here, all right, so I think there. If you're here, just let me know by some comments, maybe. All right, okay. We see Kimarine, we see First Place, Broxy, CV2TE. Okay, so basically what I think is going on here is Bitcoin likes to play some tricky games with people, and this is what I was talking about when I said patterns are a lot subjective. We had this bear pennant here. Now let's put that up. All right, I'll just erase all of this so that we can start from fresh. Okay, so we had a drop, and what I was talking about in my other live session with my VIP members. Okay, so I was saying that when we have a drop like so this like this, yeah, let me put this, where is, okay, so that I can see the comments. How do I join your peer? Yeah, you can just, hello, Amy Johnson. I think I have the links to them in my in the description of the other video, but just let me know on Instagram. Just contact me on Instagram and I will give you the links. If any of them do not work, yeah, DM me on Instagram. I'll give you the link to the Discord group and to the Telegram. Okay, so what I was saying before in my other video, my VIP video, is that when you have a drop like this, and I've talked about this on this channel, so this is like this drop here. When you have a drop like so, and you have a consolidation like so, yeah, you could call this a bear pennant. It is a bear pennant. All right, so but this can be compared to this. So you have a normal red candle like so. Consider that this is red. Let's just change that to red. Okay. So, all right. Now, if this happens like so, you see this as a bearish candle. Now, bear pennants are, yeah, bearish continuation patterns, which means price will normally go to the downside, and that's what we see here. All right, so if here you find price consolidating, but consolidating mostly to the downside, and even if it is to the upside, you will see that as, yeah, and even if it's going up, you will see this here. Even if it was like so, you will see that as a bear flag. So up or down, it is a bearish pattern. Okay, so if you see this like so, and you see something like so, like so, okay. Now, so this is what we are looking at here. So when you can learn how to read patterns as single candles. So this price action that comes like so can be seen as a single candle, and even if you go to higher time frames, you will see them as single candles. If you go like to the monthly, you will see this entire price action here would be only in a month, or say a week, or a week. Now, so if we see this and this, we will just see this as indecision, but we know that it's mostly bearish, so this continues like so, and that's exactly what we are seeing here. But what happened here, now I'm saying this because a lot of people, when you see price consolidating like this, it is a bit difficult to know where price is going to go. So you cannot really guess. But if you see it as an entire candle, if you learn how to look at it as a single candle, then that could help you with the decision in knowing where price could potentially go. Of course, you are going to use the volume profile here and the stochastic RSI to know if price is undervalued or overvalued. All right, now I hope that makes sense, yeah, because consolidations can easily, you don't know where price is going to go, so it's very confusing. You just look at it as a single candle, then you can that can help you with deciding where to place your trade, if it's going to go up or down. Now here, this was clearly a bear pennant, and we broke it to the downside here, so it goes like so. Now I'm putting this trend line here so that you can immediately understand what is happening here. Yeah, you can immediately understand what is happening here as we speak. Now let's put that like that, and then I hope this is clear. I hope everyone can see this. Hello, Sajikumi, Yusuf, Al Farouk. All right, so we have our bear pennant that looks like so. Yeah, we have this bear pennant. Okay, now price broke from it to the downside, and if you have this, we see that the price action to the downside has not been completed. It has not been completed. So I'm saying this because I was like, maybe this is just actually going to reverse and go to the upside, like it's just going to go back up. But this is all, we are all speculators, and we're all we're speculators basically. We just guess, we do all of this to know where it could potentially go. There is no guarantee on where it could go, so we all do put in yearly candle. Well, no need for that. Okay, so all right, so we broke to the downside and we came down here where we went back up. So this should be that target. It should be, yeah, let me put that to the body. It should be that target. So, and to this one right here, that should give us that target. Hello, it gives us the same target. It gives us this target here, so we can take this. All right, so we see that price bounced from here, and this was the first price target of this downfall. Actually, it's the second, because the first one is this here. So with each movement, you get a price target. Each movement, you get a price target. Where is this one? All right, so when it goes like this in waves, these are your price targets, because these are decisions that people are making. The resulting effect of this movement is going to be according to how these decisions were being made. So that's how these actually predict price targets. So each I would say each trough and each like each wave or each complete frequency gives you a price target, and that's exactly what we saw here. But also know that price has the tendency to retrace after meeting with any price target. So if it does come down here to exactly, this will be exactly 15k. If it does come down there, it has a very high chance of retracing from it. Now, when it retraces, it could as well bounce off from this one, because this will then become resistance if it comes down here. Now, this is just assuming for now. All right, so it came up here. When it comes up here, immediately your vision of the pattern should change. Yeah. Now, if we take this, enlarge this like so. So patterns are kind of funny because you keep on changing the patterns in your mind as they go up. If you put this like so you are taking it from the bodies. Yeah. Now we see that there is another pattern here. Let's put that in what? Let's put that in this color, and this also in the same color. That's not the same color. Okay. Now, so this now will be a descending wedge here. A descending wedge. So the reason for this is so that you know where it could go if it actually goes up from here, and we are coming to that. So this descending wedge comes right down here where it's been broken by this candle to the upside. Now the candle is a 4-hourly candle that has been broken to the upside with the with the stochastic RSI in the overbought. So there is a lower chance of it continuing to the upside as the stochastic is in the overbought. Now note that it may as well just continue going to the upside even with an overbought stochastic RSI, because the daily stochastic RSI is not in the overbought. So with higher time frames that are in the undervalued, you could have the lower time frames doing some abnormalities, which would not happen if the higher time frames were in the overvalued. The 3-day time frame, and we'll go to that later, is also in the undervalued. So shorting, or say betting that the price will go to the downside, is a bit more riskier now because the higher time frames are in the undervalued. Well, the weekly is also in the a bit more in the overvalued, the weekly stochastic. Now, so we can see that this right here is combating this as support. So it's actually being supported here. Some people would call it a retest because, well, it's in the 4-hourly, but on the 1-hourly or 30-minute time frame, you would see this as a retest. So some people would think that from here, it could just go like so. Yes. So what we would be looking out for is that if we are to consider this as a descending wedge, the price target will go like so. So from here to here, take that, put that here, the price target will be $17,253. That is if it actually retests here and goes to the upside. But if this candle here closes below this resistance, below this support will become resistance for it to go to the upside, and we can find price going back to the downside. Now, if that does happen, you eliminate the idea that this was a descending wedge and consider this to have been a retest of the bear pennant. So this would go like so. This will go, so just put that away, and you consider this to be a retest of the bear pennant, of this bear pennant. So we take this back to blue, and this price action like so, this price action would have been a retest. Let me put that in yellow. So this would have been a retest of the bear pennant, Now we go to the hello, Akashan, hello, Raymond, hello, David. Is it David or David? All right. So this would have been a retest of the bear pennant. So this candle right here will confirm what we are talking about. Of course, if you are, let's say you want to bet that the price will continue to the downside, you need a confirmation candle under this resistance here, because now it's still the support, yes, but you need it to become resistance by it being resistance, you will need another candle to hit on it. So you will need to wick from here, like a candle like so, a candle that looks like so. If that does happen, then you know that it will continue to go to the downside. Well, you think, you never really know. Okay. Now, I was talking about, now if you are not in my premium groups, well, I do not know what you want to do, because I am taking people from scratch basically into all of this. So I started the other time, and we'll be having another session coming Sunday 9 a.m. UTC time. So I'm taking people from zero knowledge at all, and we started the other time from candlesticks, and we started talking about price action inside of candlesticks. And I think I've also made a video about that here on YouTube for everyone, but they are more random, so this is more, demands more work, I would say. So anyway, here we were talking about indecision, and I've talked about this on my other complete beginner's guide to technical analysis. We see the indecision happening here where we have the red doji, but now this is a bearish engulfing pattern which has now been now you could see this indecision here, the red doji. You see this here. It comes with the green doji following, which means buyers are taking control even in the indecision. But now we have another red candle. So you see a real battle going on here. This candle goes up to confirm that it has broken the long-term resistance from up here. So you see that none of these candles succeeded to close above this trend line here, this down sloping trend line here. But this green candle closed above it. The green candle closed above it with the bullish engulfing pattern. So you expect price to go higher. But after that, we have a bearish indecision. A lot of people, they're wondering basically, what do we do next? What's going on? Where should we go next? Should we continue to the upside? And the candle ended up red, meaning that sellers we have more people thinking that perhaps we should go to the downside. That's what this candle is telling us. The next candle comes up with same indecision, but now they are more confused. They want to go more to the upside. But then the next candle comes in, and it's a red candle, a bigger one, meaning that all of this fight here, the sellers are winning. But those sellers are now facing some support here. They are actually fighting to support. If they succeed to close below this, it means that all of this here was a fake out, and then it's going to come back here. You cancel your idea of this being a descending wedge, and you consider it as a retest of the bear pennant. Normally, when you see any price action, when you see a bull pennant, a bear pennant, any of this down sloping wedge, any of these, always expect a retest, and that retest confirms something bigger. So don't be surprised if this actually comes back to this 15k target here and goes right to the target of the bear pennant itself, which will be somewhere around I think that's around $9,000. Now we have the opening of the the next 4 hourly candle. You see that this 4 hourly candle did not succeed to close below this support here. So you want a total close and a confirmation candle to know where it's actually going to go in the short term. But the stochastic here, let's go to the 1 hourly and see if we can find any bearish divergence. The stochastic there is telling us that this is on the overvalued, and it may most likely go back to the downside. Now you can also see something funny going on here. We have a high here, micro high I would say, and another high here, but we don't have another high in the stochastic. Now the stochastic measures momentum. Yes, the stochastic RSI measures momentum of price action. So the stochastic generally has to only go up. If the stochastic is going down, it means momentum is dropping. If it is going up, it means momentum is increasing. So if the price is decreasing, you want the stochastic to be increasing. which means the momentum, the sell pressure is actually increasing. If the price is going up, you still want the stochastic to be increasing, because it measures momentum. Stochastic RSI, or even the RSI, is relative strength index, so it measures relative strength. It's simply strength. It should just go up, because that will mean that the strength is increasing. But if it is going down like so and the price is going up, it means that the momentum of this price action is not legit. It means this will easily turn around, and it could turn around rapidly. So always pay attention to the stochastic. Sometimes I go into a trade and the stochastic is going down while the price is going up. That tells you that there is a bearish divergence, which means price can easily come back to the downside at any moment, and that could happen with a lot of velocity. So always pay attention to the stochastic. Stochastic. I like the stochastic because it's faster. The RSI is slower. It can be more accurate with giving you a stronger prediction, but the stochastic leads you to understand what's going on in the moment as price action happens. So what we are basically waiting for here, or what we will expect, is that this should be a retest right here. You can see how it is basically closing right at the right on top of the trend line right here. This one tried to close on top of it to continue to go to the upside. This one took it back down here. So we actually have something going on here. Now we can also see some crazy thing happening here, which is funny. On this 4-hourly candle, we can see an inverted head and shoulders pattern, and this is what I'm actually just noticing now. No, the inverted head and shoulders pattern, I noticed it before. I knew this was there. It's clear. So we have this. Yeah. Now the target for this would be like so. You take the bottom of the candle up here, put where it broke out of that, where it broke out of this inverted head and shoulders. Now, where do we expect it to go? If it breaks out of this, that should put the price at $16,881. Yes, but it has failed to close above the resistance here, the resistance which is the support of the bear pennant. So what do we expect to happen here? We see that price is actually consolidating between the support of the bear pennant, which is this blue line here. I hope everyone can see that, and the resistance of it's consolidating between the support of the bear pennant. So this is that support here. It's this line. It extends up to here, and the resistance of the bear pennant. So this is the resistant line here. The resistance here is the support which we are seeing now. So we are basically seeing something like so. We are seeing a consolidation there. So where do we think the price could go? We know that the price broke out of the inverted head and shoulders pattern. So if the price continues to come like so, this will be a descending broadening wedge. Descending broadening wedges are bullish. They are bullish patterns. So if we take this from here, we put here, and we put to here. We take that from here, and we put here. So we see that this will mean that price will come somewhere around here. That is to finish the target of the inverted head and shoulders. Now I saw this head and shoulders earlier today, and I was like, yeah, inverted head and shoulders, they are actually signaling a stop of the trend. So could it mean that we have seen the bottom? That's the general question. But I saw this on the 4-hourly. You won't see it on daily. and we are seeing a bearish divergence. So this bearish divergence would mean that this, even if it goes up to here, that could still be fake. So it could as well go up there. It could as well go up here to 16,800 even, and this 16,800 will be the target of the descending broadening wedge, which is actually forming right now, because we see that price is hesitating to close below this support here, which the support is validating the descending wedge we were talking about earlier. I hope no one is lost in this, because patterns can be confusing a lot. I hope no one is lost. So we talked about a descending wedge here, which has been confirmed by price breaking up to the breaking back to the upside here. Yeah, so we have two patterns working out here: a descending wedge, and the bear pennant. So the bear pennant is only validated, or say revalidated, if price actually closes below this line right here. So it will, when it closes below this line right here, it will revalidate the bear pennant, meaning that this upward move to the upside here was a retest of the bear pennant. But if it succeeds to close above here on a daily candle, will mean that it has reclaimed this level here. It has reclaimed the support. It has reclaimed the support of the bear pennant, which is this line here. No, the resistance of the bear pennant, which is this line right here. And then it could continue to go to the upside to the target of the descending wedge here. So let's bring back the descending wedge so that you can understand exactly what I'm talking about. So, but I think this will go up to the target of this inverted head and shoulders, which we see here, except it comes back on a 4-hourly candle. We can even see a bearish engulfing pattern that formed here. Now, another pro tip which you can use for your own analysis is that in any time frame, yeah, in the 4-hourly, 1-hourly, whatever time frame you're looking at, if the first minutes or hours of that time frame is bullish, the last minutes or hours could be bearish. So on the 4-hourly, if I see the first 2 hours acting out bullish, I would expect the last 2 hours to be bearish. So never you rush into a decision because you saw the first 2 hours being bullish. It could be bullish like so, then it will retrace about 50% of this candle we are looking at, then it dumps right back here, leaves a wick up here, and shows this to have been confirmed as the resistance. The bearish engulfing pattern here did not succeed to close below this support here. If it does, then it will confirm it as resistance by another candle. You always need a confirmation candle after a bearish or bullish engulfing pattern. So if we look at this right like so, I hope everyone is up to. You guys are talking about football in the comments. All right, so if we look like this, if we look at this like so, let me put that color back into white. Okay, now if you look at this like a descending wedge here, you will now see what I'm talking about. You will see this price consolidation here. This can result into this because we have a support from this bear pennant. That support is acting as resistance here. It's acting as resistance, but this price consolidation here, if it continues to come like this, this will be a descending broadening wedge, which is a bullish pattern. So you would expect price to move from it. If at any time when it goes to the upside, you will have to take the target from up to down, but for now you would see that target keeping us right about $16,800. So but that $16,800 is really close to the target of this inverted head and shoulders. So many patterns to be seen on BTC. Very confusing at the moment. Could happen. Yeah, everything could happen. So you are looking for confirmations. All right, you're looking for confirmations, but there are only two. It may sound confusing because of the way I say it, but there are only two actually. Two macro, I would say. The inverted head and shoulders, we've already seen it. It's been validated here, so we'd expect that price goes up until here, until about 18,600. Yeah, would expect that price go up there, but we would be waiting for this candle. This candle here will tell us if it is actually going to go here or it's going to come to the downside, because of these two dojis that you see here. The two dojis show indecision, so you want a confirmation of the up to the downside. Even if it comes to this upside here, we could see it go back down because it has validated the pattern that led it to that target. So each time you see it go to a target, you want it to come back to its initial resistance or support. If you see it that way, it's bullish. If that way, yeah, I know it can be a bit confusing, but that's just the way I see it, you know. It's a bit hard to learn patterns, but I don't think it's difficult. It really depends on how you normally see stuff. No, I don't do forex. It depends a lot on how you see stuff. You could be a natural, you know, patterns seer, you know, like you'd learn to rename people. You'd say your name should be this. Many people are that way, and if you're like that, then patterns can easily suit you. You know, you easily notice them. It may sound a bit confusing, but with with time, I think. But I think a lot of people who are, you know, like older subscribed people to the channel, they understand this more, because all the time that's what I'm looking for. That's what I look at, you know. Yeah, so we would be waiting for a confirmation here. Would be waiting for a confirmation here. This will not be a good point to want to buy or sell right here, because of this is the consolidation. So you'll be waiting for price to either break to the downside. If it closes this 4-hourly candle we are looking at here now to the downside, then we know it's just gonna go down, because it's gonna go back to the support. This support of the descending wedge is gonna go to that support. That support will most probably be here. Remember that it's going in waves like so. So this is it going like so. If it breaks back to the downside here, you would want it to come somewhere here. All right, now I was looking at the trend-based fib on TikTok earlier. I don't know if I drew that on the 1 hourly or on the, yeah, I think I drew that on the 1 hourly, or even on this time frame. You can see that. So we see this. Yeah, I think we should look at the trend-based fib and see if we have any Fibonacci extensions or retracement levels that that can relate with what we are looking at here. Now that's a tool that I've been talking about lately, and I think it's a really good tool. So the Fibonacci, the trend-based Fibonacci, it helps with the levels. You know, you need some confluence to your idea or thesis. So if we take trend-based fib here, we come to the swing high right here, and we take that here. No. So if we come to this swing high here, and what the, all right, Okay, so we have to come to the lowest point. This is not the lowest point here. We have to come to this one, and we come to the highest one. So the highest one is this one, the highest swing high. So you see the wick, yeah, you have to select the highest one. So the highest one is here. Wait, how would it be? All right. Okay, so we can see that price actually closed below the 0.236. Yeah, it closed below the 0.236 here by this candle. So this will be resistance. This 16,552, that should be resistance here for price to not go to the upside, and this will be the natural support of this downward, of this downward price action here. But now you can also see that the inverted head and shoulders, the neckline of that inverted head and shoulders, it comes like so, coinciding with this 0.382 fib level. 0.382, 0.5, 0.618, that is where you want price to either bounce off of or be supported by, if price comes down here and can go further. But even if price just comes down here, I think it's just going to go right down to the 0.618, and that 0.618, you can see exactly where that 0.618 sits at. Yeah, it sits exactly at the support of the descending wedge here. So you can see it happening, and this here is the golden pocket. That golden pocket is exactly there. So if the price actually closes down from here, I would expect it to come right down to the 0.618. 0.618 would be at 15,540, $16,540. That is where we would expect the price to come down if it closes a 4-hourly candle below here. A better confirmation would be for price to close a 4-hourly candle below the 0.382 Fibonacci ratio, which means it's actually going to continue to the downside. Now, of course, you will find some resistance or say some support here at the 0.5, but you would find major support actually coming in at the 0.618 down here. Yeah, so now one thing you have to, now you also see that this price target here, you can see how price targets always match with the Fibonacci ratios. Now this price target is this one gotten from here, this from here to here. I told you guys that it bounces there, it all works in like waves, like so. So you measure these, and these are your targets. From here to here is a target. From here to here is a target. From here to here, with the candle closes, is a target. From here, candle close to this one is a target. So if you take this one and put where price broke out of the descending triangle, you have this. It's exactly at the 0.786 here. So we need this to happen. Yeah, we need this to happen. It may not, but that's the biggest way we could be looking at this. If this candle closes below here, we would just have a continuation to the downside if that does happen. Yeah, now another important zone you could be looking out for is the 1.618. This is the final destination of this trend if it continues to the downside. Now let's see if any of our targets here can coincide with this 1.618. What could coincide with the 1.618 target? That will be the pole of the bear pennant. Pole of the bear pennant would be somewhere around here. So how do we get that? We get it from the support of this one. So this We have this like so. So this is M formation. Yeah, this is like a double tap from here to here. So you have to find the neckline for that double tap like so. This will be the neckline, yes, and we are using candle closes here. So neckline, neckline, neckline. Where it closes here, that is the beginning of your pole. This candle, this is the beginning of your pole. You might be confused sometimes to know where is the beginning of the pole. Is it here, or is it here, or is it here? You take the previous formation where it broke down from that previous formation. That is the beginning of your pole. You take your measurement from there, and you take that measurement and put down here. Now, isn't this a coincidence that that line is just coming to bounce right down here at the 1.618 Fibonacci, the 1.618 golden ratio? So that's really funny, you know. Like I did not know. It's not like I knew that it's going to bounce there. It's just going to bounce there. It's I don't know, perhaps it's some kind of sorcery of some sort. So it comes down here, you put to where it exited the bear pennant, and yes, it's bouncing right at the 1.618 Fibonacci ratio. We have the second price target here bouncing at the 0.768 Fibonacci. 0.768 Fibonacci will put us at 15k. Exactly 15k. Exactly 15k. If you follow me on Instagram, you will know a time I said Bitcoin is on the daily, Bitcoin is staring right at 15k. So we have these targets to the downside, but of course you don't expect it to happen in a single candle. Yes, so we've already met the first target here. That first target is this one from here to here, which is this one. It also ended at the 0.618. This one. I'm gonna put this in white. All right, so this from here to here, if you take this from here, it came here to the 0.618. Now when you are looking at calculating these targets, always put plus or minus a little percentage. Yes, don't assume that it's going to bounce exactly here, and don't assume that it's going to bounce assume that it's going to bounce somewhere around it. So perhaps you can just shift if you are targeting something like so. Some people usually ask me, where do you take that target from? So if you are targeting something like this level here, you can just shift it like 0.20%, yes, 0.20%. So you are targeting that. To the downside, the same target, like 20% to the downside, and you will have somewhere around it, yeah, like just like the golden pocket is acting out here. So always target somewhere around it, not exactly on the target. So we have this here bouncing. The first target here is bouncing at the 0.618. We have a higher tendency of it just coming straight from here, coming right down to the 0.768, which will be somewhere around actually at 15,000, but you can say somewhere around 15,000. Of course, if it comes there, it will also bounce back up. If it's bouncing back up, we would expect it to retrace after the 0.618 or the 0.5 Fibonacci and continue. And we do not know what could happen. What could happen? Yeah, maybe some, I don't know, maybe Russia did something, or some other big investment. Maybe we'll have grayscale happening here. Who knows? You know, we had this how do you call this guy, this FBIF guy, the Sam Bankman-Fried. He happened here. This was him. We had 3AC Capital happening somewhere, I think somewhere here. We have 3AC Capital happening somewhere here. We have yeah, I think this right here, and we have Terra Luna happening somewhere up here. So yeah, somewhere up here with Terra Luna. If we go right back, you will go right to the pandemic. I don't want to say the name here on YouTube. But yeah, these patterns tell us where the price is going to go before that ever happens. The news can come up and tell us that this happened, but you could have estimated that that is eventually going to happen. Pattern reading is better with investing and longer term trading. It may not be good with scalping or day trading because, well, you could use double bottoms and double tops and some of these for day trading, but to be highly precise, pattern trading may not help you with that because they take more time to form. You would need a lot of price action to see a double bottom like so, except you are going to the 1 minute, and that in the 1 minute can easily be invalidated. So anyway, this was just a rundown of what was going on here, what we could expect. If we close above here on a daily candle, we could expect price to continue going to the upside and even up to here 17,000. This is exactly at 17,194. A daily candle close above here, which will mean that price action has reclaimed this swing high here. Yeah, which will mean that it has reclaimed this swing high here. So approximately 17,198 actually. So 17,200, a close above that. And to be highly sure, I would just say 17,300. A close above that with a daily candle will confirm to me that this down here, we may as well be headed to the upper zones. Before I was telling you guys that I expect it to reclaim a candle at 17,600, I think 17,600 to 17,300 to 17,600, with the highest close at 18k. 18k is here. Now we have a major bear flag here. Yes, so note that this price target is just for this price action here. We have a bigger one, this bigger one. We have this to worry about because this had its own target. And let's just measure now and see where that would lead us if we were to calculate this. And we can see that some of the times this can really be creepy, to be honest. We can see this candle here. Why is it just tipping here and going back to the downside? Each time that happens, even in a bullish engulfing pattern, I would conclude that that's a rejection. So if we take this from here, that will be here, somewhere here. So I would assume the top to be here. So if I take this from here to here, and I put that where the price broke to the downside, and yep, we see price consolidation. So we will have some very high cluster around 12k to 12k. Around 12k we will have very strong support coming in there. 12k. If you follow up in my Telegram, I leave the links always in the, I will leave the links to all these platforms in the description of this video or in the comments. You would know that I've been talking about this area of interest here. So I think price could come down to here. Price could come down to here, but this sudden drop in this candle, I would expect a retracement of it. That retracement would put it somewhere around here, the middle of the candle, which will be somewhere around 18,300 to 18,300. So we have this is on the weekly time frame, by the way. The chart we were looking at is on the daily time frame. On the weekly time frame, all of this has been grouped together to give us and it looks like Bitcoin is actually trying to battle its way out of the downsloping wedge on the daily. Anyway, so on the daily time frame, we have price action all expanded. Yeah, we have like it happening. You can see the various stages. But on the weekly time frame, all of that has been grouped to just weekly candles. So here I would expect price to come back to 18,300. This is where I would be extremely sure of it going to the downside. That is where I would be extremely sure. But as of here, I could still expect it to go up. So shorting here would be somewhat risky. Yeah, it would be risky, because even the weekly here, the weekly stochastic, is also getting very close to the undervalued area. The 3-day stochastic is already flipping bullish on the 3-day time frame. Remember, it can stay there for some time. It does not only have to if it gets here, it does not mean that it will immediately cause price to start going back up. It can stay there for some time while price is plummeting, as you can see in these other time frames here. Yeah, so that is the end of my video. I just wanted you guys to know, to be in the know of what is going on. A lot of people have been asking me, what do you think is going on now? What's going to happen next? And also, this price, this volume that is decreasing here in a descending wedge, that's kind of bullish. That's actually bullish. Yeah, so if we actually have that candle close up here at about 17,300 on a daily candle, that will mean that this will go back to the upside. Now, some other thing before I close the session. If, and this is very conditional, if Bitcoin, for some reason, we have this price action here, let me put that like so. Now, this is the entire chart, yeah? From the all-time high to where we are now, basically. So let me give you what I think will make me think we have seen the bottom. So this is what will need to happen for me to think we have seen the bottom already. From here to here, I hope you all can see that. We can see that price comes like so. Says Tether issues. Yeah, Tether really does have some issues. All right, so from here in the RSI, not even stochastic, in the RSI to here, we can see that this was our previous high. Yes, so this is when we rallied from the pandemic up to the first all-time high, where we descended into this down sloping. Now here, I remember a lot of people were saying, oh, this is the end, it's going to zero. I remember a lot of people were saying this. Even I think some famous guy, he was also saying that this is the end. I mean, this is it. Cardano here was at about I think Cardano was at a dollar 30 maybe. Yeah, I think $1.30 around here. Aave was at about $170. I bought some Aave here. XRP was at about 80 cents here. It came down again to about 50 to 65 cents. XRP, I bought some XRP here, then went to the bull market. Well, we were in a semi bear market, I would say. So we left from here down into this descending wedge here. But you can notice that from here, this high and this higher high, it's not being represented the same in the RSI here. This is what, you know, spooked me. This is what I made a video here on YouTube, and I was telling you guys that I may start selling if BTC closes a daily candle on under 63k. This is what spooked me here. You know, the RSI here was showing a bearish divergence while price was, you know, being very strong to the upside. We did not have any strength for that. So if we look here and here, we will see that that is what happened. But you can also see in the inverse form, and this is counter, you know, counter 3k, counter 7k. You can see that as price continues to go to the downside of this, that is as it left from the all-time high into this ascending wedge here, and I was still talking about 20k somewhere around here at 49k. You can see that from there to where we are, as price continues to go to the downside, the RSI is also going to the downside, which means the selling pressure, say the strength of that selling pressure, is also dropping as price is dropping, which is a bullish divergence. So we've had a bearish divergence, price has dropped, and we are now in a bullish divergence. This is what keeps the promise of a bull market, in my opinion. A lot of people are going to say we are going to zero, and a lot of people are saying it already, that this is all going to zero. Don't trust crypto, Bitcoin is a scam. Some people would leave comments in my videos like people would say, what, move on. Yeah, some people told me to move on, this has all been a scam, take what you have now and run. I have my calculations. I know it can go to here, where I think we will suffer intense capitulation here, area of maximum interest. I think this is where maximum capitulation will happen, in my opinion. Of course, I think here a lot of people, this that is happening here is what I think happened here at 2018. This you can also see the triangle. Yeah, this is the same kind of triangle that we are having here. We had this drop, the initial drop on the weekly candle, you see it here. Then we had this doji here. You could see it and be like, well, we're going back to the upside. Well, we continued on the downside and we were here for months. So it's the same thing that I think is going to take place somewhere here. Here, I think we could wick down to 7 and even 3k, come back here, stay here for months, then someday, God helps us, we go back to the upside, in the bull market. So that's my map. That's what I think is going to happen. And if I was to draw this, I would put it like so. I would put it like so. So I think we come back down here. I would actually begin with where I think is the maximum zone for price to reach if it was to go to the upside. That's 18,300. Yeah, 18,300, and I think it will come back here. This will be the first price target. The second one is somewhere around here, back to about 15k, and back down here to the second price target of at about 11k. Now these price targets are taken from this descending triangle here. So I think it comes back to the previous resistance, which will be at $12,700. Then it comes now to the final price target of the movement. Now the final price target here is this one. Is the target of this bear flag, like so. In my other live video, I was talking about this. I talked about this bear flag. So from here, you knew that price will eventually come to the downside here. So this here is the bear flag, and this bear flag's target sits at about $9,000. Now, so I think we will eventually come back to this, come down to the $9,000, and I think the maximum there will be 12,000, 11,000, come back to 12, and keep galloping in this zone here. That's just my just what I think could happen. Like there will be a time when this is going to do this for months. Yeah, this is where people are going to suffer and believe that, well, it has ended, it's been a fun ride, and yeah, that's it. I found some guys saying that Bitcoin is not a good store of value because it was at 60k. If you bought at 60k, you'd be at a very huge discount now, and so it's not been a store of any value. But I think this is a speculative asset, but when it gains full adoption, it wouldn't be so speculatory anymore. Well, not so speculatory, because everything is speculatory. Even stocks are speculatory. So yeah, I think from here, perhaps the 3 and 7k, which I will make another video about because that will be a very longer video, it could weak down to 3k here. Now you see where the 3k sits. Yeah, 3k is sitting at a Fibonacci, at a 2.618 Fibonacci here. I will come back to this later. And this 3k is also where you have a CME gap. If we were looking at vector candles, you will also see a vector candle around 3 to 5k here. We will make a dedicated video for BTC to 7 to 3k. We'll make another video for that. So I think it could wick down here in a wick and spring back up, because, well, it won't give you much time to be buying at 3k. Everyone will want to buy, so of course it will go back up, and it will keep on consolidating here for months until one day it goes up, like so. So thanks so much for watching the video. Thanks so much for being here with me. That's just what I think might happen. I just think there will be huge consolidation here. I don't think this thing is just going to go back into the bull market. There is a very high tendency for people to think, well, price is just going to go up now because it moved by, say, $500 to the upside. Price is just going to go down now because it moved by $500 to the downside. I think all of what we see, happening in our real world is actually planned already, to be honest. I think all of what we see, there are some people who have plans and they have already mapped out all that is going to happen. All the wars, all the illnesses. I just believe that all of this has been, many people have figured this out already, and we have no choice but to just experience them. We, peasants. So that is what I think is going to happen here. And yeah, until proven otherwise, that's just what I think. Thanks so much.